G'day, my name's Jack Corbett. I'm the Managing Director and CEO of Corbwood and Associates. We are an allied financial services company that has very quickly made our name and become known for specialising in helping people to use their superannuation to buy an investment property. As you can probably tell from my accent, I'm not originally from this country. I did move here from Birmingham in the West Midlands of the UK in 2009 as an 18-year-old boy intending to do a gap year. But very quickly fell in love with this country, the people, the culture, the competitiveness, and saw an opportunity for me to be able to help myself by way of helping other people create wealth through creating really simplistic financial strategies. First met Mark and his wife Claire and the business Cost Appreciation because we were neighbours. We actually had offices on the exact same floor in our headquarters in Surfers Paradise. After striking up a social relationship and seeing that Mark and his wife Claire had very similar moral and ethical standpoints to me, they really cared about people, they really cared about delivering a world-class service and putting the customer at the centre of every decision that they made. I saw that there was some synergy between our organisations and decided from that day forward to ask Mark and his team to kindly provide the depreciation schedules for the 1,000+ investors in which we've assisted in this country to purchase properties. I think you find the true brand of a person or a business is how people talk about them when they're not in the room. That's what I love about Mark and Claire, is what my customers say about them and what other people who use their services say about them when they are not present. That's the true brand of a person or a company in my opinion.
So how did you get into real estate then? Because I know you've always been passionate about property and that side.
For sure. I mean, I grew up on housing commission, so no one in my family had ever owned a property. So I was always passionately obsessed with being the first person in my family to own a home. At that time, I don't think I understood what a mortgage meant, but I knew that I just wanted to have my name on the title of an ownership of a property. So from a very young age, it was a passionate obsession of mine. And once I arrived in this country and realised that construction, real estate and property were alongside the likes of mining, energy, banking were the cornerstone of the economy here, I realised that it was an opportunity to be able to work in a space that had high levels of consumer desire whilst also operating in a space that could be very fruitful and financially rewarding for me as well.
See, I've been doing depreciation for about 20 years, including in the UK. Mm-hmm. When I first came to Australia, I was amazed that you can offset tax depreciation and losses against your own personal income.
Sure.
So in the UK, that just doesn't happen.
No.
All losses stay in a separate pot. Mm-hmm. See, all you can do with losses in the UK is just roll them over each year, but here at least you can offset it against your income.
For sure. I think income tax deductible or capital deductible elements to a property differ so significantly in this country, and it makes it far more appealing, right? People who are in the high income bracket, who are paying 46.5% or greater on every dollar of income they earn above that amount, if I can offset that through the depreciation of a property portfolio, then it starts to become a bit of a no-brainer. If I can save 30%, then I actually don't need this property to be rented or to grow for it to be profitable for me in this country. And I think that's the reason why a lot of people retire independently, is because it's very easy for Mr. and Mrs. Smith, the run-of-the-mill average income earners, to be able to own 2 or 3 properties before they retire and pay them off in full. So I believe this is the land of opportunity. I think this, if it isn't already, it should be the #1 most desirable country in the world to live. And one of those reasons is because of the advantages that are offered to us as investors to truly create the capacity to get wealthy.
Yeah,
for sure.
And especially now, new properties obviously attract plant and equipment and the capital works.
Absolutely.
With the legislation changes in May 2017, it sort of detracted from people buying second-hand properties.
It has.
But now with new build, which you focus on, is massive depreciation benefits that they could be getting.
You're exactly right. Since May of 2017, we've taken a strong focus on assisting people to purchase brand new or nearly new properties because of the tax advantageous nature to that. I think it's something that moving forward you'll see far more of. But I think the fantastic decision from this government, and I'm the first person to bash a politician when I get an opportunity to do so, but my support of this country is that they do continue to stimulate the economy by way of creating grants for people to get into the property market for the first time, a second time, or to go and purchase a new home. But by continuing to offer the greatest tax incentives to people to purchase new properties, stimulates new construction, which continues to offer every tiler, plasterer, plumber, gyprocker, in the country, more work. The more people work, the more they earn, the more they'll spend, the more GST, the more we continue to see this economy move forward. So I think it's the decisions made at source that ultimately lead to the best lifestyle that every single one of us, the general public in Australia, gets to live.
Any investors out of Sydney and Melbourne, what advice would you give them?
My advice at the moment would be to focus on market trends, and the most buoyant part of the Australian market at present is freehold property, so not strata titled, no body corporate or units. Look to purchase individually titled land parcels. The modern day suburban block is not a big one, it's a 350 to 500 square metre block, but the most buoyant sector of the market is the $450,000 to $500,000 price point, where you're renting at above a 5% rental yield. The markets offering that would be the Sunshine Coast, Brisbane, Gold Coast, Newcastle, Adelaide and Hobart. They would be the 6 cities I would turn my attention to initially, but obviously I would be a hypocrite if I asked anybody to look outside of South East Queensland, because 90% of my own assets are held in that area, and I'm probably a biased and very proud resident of the Gold Coast, hence the reason I believe it's the best place in the world to live, not just the best place in this country.
I know yourself, Cordwood has been very proactive in providing a depreciation estimate to all your clients.
Yes.
What's your impression around, do other companies do that? Is it a known area? Are people aware of getting the depreciation schedule in your industry?
It's like black and white, right? It's like flicking on a light switch. Once you know, you know. And once you know, there's never any logical reason you wouldn't do it for your customer.
Yeah.
And I do believe there are still a volume of people who are completely unawares. It still baffles me that 8 out of 10 people I speak to on a daily basis, again I'm going to refer to them as Mr. and Mrs. Smith, the 45-year-old Australian couple with the 2 kids, you get where I'm coming from? They have zero idea on how tax really works, let alone tax depreciation specifically from a property investment.
I think we're very similar in a way, Jack, that you've got a passion to help people grow their wealth, and myself, I've got a passion at trying to help people save money so they can invest in the wealth and growing that stuff.
I often ask that question, what's more important to you, making money or saving tax? Because some people are already earning 180 grand a year and are watching $45,000 of that leave their pocket. Yeah. So what's more important? Do you want me to help you to get some of that back? Or do you want to earn $181,000 and accept the fact that 46.5% of that's not going to belong to you? So not everybody wants to make more money. I respect that. But ultimately, wealth can be created in many different ways, right? And I think one thing that people tend to just overlook is their superannuation is one. People just abandon it. They don't wish to understand what it is or how it's going to be a pool of capital they dip into during the later parts of their life when they're not working. But also, anybody who might be listening to this, ask yourself the question, when did I last sit down and challenge my accountant to find more ways that they can mitigate or minimise my tax legally and ethically? Because I do it every year. I believe I've got one of the best accountants in the country. He still always finds one more way that we can do it. So if you haven't called your bank in the last 5 years, mark my words, they have not reduced your interest rate on your loan. If you don't call your phone provider, your gym provider, very rarely will you ever get a phone call in business where they say, hi, I would like to charge you less. Well, the ATO is no different. Until you start to have your head above the water, your eyes open, and you're actively seeking ways that you may be able to minimise your tax, you mark your words, they're not going to come and find you. So thank you for having helped me and my customers with our investment properties. I'm grateful that I'm now consciously aware of ways that I can put tens of thousands of dollars back in my own pocket while still acquiring on paper long-term wealth through the growth and equity I've established in my property without cost and without the support that your team offers us. Me and my customers simply wouldn't have been able to do that.
Thanks very much, Jack, and appreciate all the tips to everybody out there on property, and hopefully we can get in touch with Jack and he can help you grow your wealth.
Yeah, thank you very much, really appreciate it.